Knowing how to control your emotions while trading can prove the difference between your success as well as your failure. Your mental state has an impact on the decisions that you make, particularly if you are new to trading and you are controlling your emotions. This is essential if you want to day trade consistently. Today on Crypto Gist, I want us to explore the importance of day trading psychology, both for beginners and for traders who have been in the game for much longer. I also want to give you a couple of pointers on how to trade without emotions. Now, we are doing this so that you don't find the slightest break in controlling your emotions, which can actually lead to you ruining your hard-earned profits overnight. Let's pick up these practical tips to master your emotions while you are trading. Do not look at your profit and loss figure while you are trading. Now, too many traders treat their profit and loss figure as a form of expressing their self-worth. And in many times, this causes a greater flood of emotions when you are trading. This leads to anger sometimes. Do not act on anger. What will happen when you act on anger is that you will start to revenge trade. This means that you will try so hard to win back what you have lost in your previous trade that it will affect your next trade. So if you follow the most important trading rule and you have a daily loss limit in place, you are basically protected from severe losses. Hence why you don't need to check your profits every now and then. You don't need to do that. But then again, we are human, so when you feel like peeping at your profit and loss just for a session, remember, read your trading rules. This is what I do. It's really simple. Take a walk. Given the fast and furious nature of your day trading, it's easy to get trapped in a sea of emotions. Watching the markets all day and staring at your monitor can be really fatiguing. Walking away from your trading screen is a deliberate break in your trading tempo. And also when you take a walk, don't think about it too much. This is an action that you take to remind yourself that you are in control. It helps to clear your mind and reminds you that you can actually do this. You have everything that you need. Allow yourself to take a break, get some fresh air. You can even listen to some of your favorite music while you are at it, because this simple act helps you to detach yourself from the markets. You don't need to take a long walk. Just take small, nice, easy, calming walks and you'll be surprised at how much this will work out for you. Just give it a try, you will see. Another rule that I have for you is to do in-depth market research. When trading gets emotional and you don't know what to do, let's say that this is you in the situation. The next best thing for you to do is to take a step back. Dive into some topics that you may have heard about, that you're curious about. If you make a concentrated effort to learn something new and in great detail, then you can get your head back in the game. You can jump back into your trading with some new perspective and a little bit of more confidence. One thing about the markets, it's always evolving and there's always something new to learn about, something that you never heard of. An easy way to go about your research is to find fresh newsletters or even investment authority that you have heard of before. Now, the topics that you are interested in is something that you can learn in. Either way is learning about something new in the markets, and seeing things from a new perspective will make you a much more educated trader. You'll also have a broader perception, more than you ever did before. When it's too noisy, you often can't make out what you want to hear. You may even get confused and do the wrong things. The same thing can happen when you trade currencies as a technical analysis. This, of course, can be complicated by the so-called market noise. If you're wondering, this term refers to random fluctuations of the price, and it does not even have logic or volume behind them. Now, the negative effects of price noise include false entry and many more. Emotions can erupt from market noise coming your way. That's why you need to be careful. Whether markets are in a bull run or bear phase, bull markets are financial markets for stocks, bonds, and commodities, which are greatly impacted by the consumer's confidence. While bear markets occur when stock prices fall by 20% or more for a sustained period of time. Now, one thing you need to know is that not all noises are significant. but allowing all of them can impact your trading strategy decision. So you need to find a way to filter out the noises to keep your emotions under control. One thing that you need to watch out for is bad timing. Emotional investing is often an exercise in bad market timing. Following the social media can be a good way to see the market and how everything is evolving, because the daily stock market reports feed off the activity that is occurring through the day. Now, this can create a buzz for investors. However, media reports can also be a little bit outdated, short-lived, or even nonsensical and based on rumors. At the end of the day, you need to remember that individual investors are accountable for their own trading decisions. So think wisely. You also need to be cautious when you're seeking the time to market opportunities based on headlines. Now, using rational and realistic thinking to understand when an investment may be in a development cycle is key to evaluating interesting opportunities and resisting bad investing ideas. That's what makes a good trader. Reacting to the latest breaking news is probably a sign that decisions are being driven by emotions rather than rational thinking, which is what you need more than anything. In conclusion, investing without emotions is honestly easier said than done. But there are some important considerations that one can keep as an individual to stop yourself from chasing fruitless gains or even overselling in panic. Understanding your own risk tolerance and risk of your investments can be a very important basis for rational decisions. An active understanding of the markets is also very vital. I can't wait to see you in our next lesson. But for now, good luck on your trade and happy trading.